Hey everybody, hope this video finds you great. Hope this video finds you well. I'm sitting here in Southeast Pennsylvania after a couple days of travel in and out of Texas to Central Pennsylvania, back to Southeast Pennsylvania to visit some family, having a great time. So far so good. Portfolio itself and the fidelity aspect of things is up to 342,000. And what I'll do is I'll put the amount of the total portfolio. We'll actually see it a little bit later, but we're up to almost $389,000 in the total portfolio. What we're looking at here, though, is just in what's fidelity. Of course, I have other things like computer shares, Cardone Capital, M1 Finance, all those other sort of things, which we'll be going through today, by the way. All the positions in all those single accounts for you guys to see. Everything, absolutely everything, fully transparent for you guys to understand where my money's invested, when I bought in, what I'm up, how much dividends are coming by, what I invested at, yield on cost, absolutely everything for you to be excited. So hopefully you guys stay for the entire video. It's going to be a long one, but hopefully a good one for you guys to see everything. Now, also looking at something for you guys, and this is heavily due to you guys following the channel. We're up to almost $3,000 in the YouTube Moolah portfolio, which is a big accomplishment here. We can see that just over 2 years ago we had $442. Now we're looking at just under 2,900 bucks. I added just today at another $209 because of you guys providing me with $209 in ad revenue in the month of November. Granted, it was a lot of hard work, but you guys are also enjoying the content and learning a lot, which is hopefully relating to the value that I'm getting from the ad revenue. So you can see here had $2,700 or so. Now we're up to $2,900 from that $209 that I added just this morning. And if you guys leave a comment in the comment section down below what ticker you guys want me to invest that $209 in, you'll have an opportunity. It's about $480 in total cash. About 270 or so dollars in cash in the portfolio at the moment. And I'm adding $209. So if you guys put down in the comment section down below, the first 5 of you to give me a ticker symbol will vote on that in a community post, and whoever wins that community post be the position that I buy. Looking back to the last person that suggested, All Good suggested 3M, put that in the community post, and All Good, we didn't get the best price, girl, but we got ourselves a share of 3M, and that's going to be paying us another $5 a year in dividends. But it is what it is. Like I said, we have $277 in cash at the moment. We also have $209 being added. I generally want to buy at least $250 or around $250 worth of stock. So if you suggest something, let's say 25 bucks or so, I could buy 10 shares of it. If you say something that's about 250 bucks, I can only buy 1 share of it. So keep that in mind. We'll try to run things that way. I can't buy partial shares yet, so that's a little bit difficult as well. So something like 3M is around 177 bucks when I first purchased it. So I couldn't necessarily buy 2 shares because that'll put me over 350 bucks. But it is what it is. Hopefully that helps a little bit. If I have 500 bucks and it's a cool thing, maybe I'll buy like a share of Tesla or something like that. It all really depends on who gets down here first. So back to the actual portfolio. Let's get into it. If you guys don't really know who I am, I'm an engineer by background, have about $400,000 in the portfolio for you guys to look at, watch me manage, watch me do whatever I do. So if you haven't already, hit that subscribe button and you guys can watch videos like this every single week or so, come out with something else, talk about something different. Alright guys, so those of you guys that are familiar with the channel are familiar with this overview that I do. It's a portfolio percentage breakdown by sector, looking at it via dividends, which is a central graph here, portfolio value, which is the graphic on the right here. You have all the dividend yields of all the sectors that I have in the portfolio. The split between the dividend portfolio, my 401k, I don't really talk about the 401k, the dividend yield, yield on cost of the portfolio, and a bunch of other different things like the monthly yield, the annual yield, portfolio value. So we're up to about $264 in the dividend portfolio aspect of things. Still largely allocated to energy stocks. But yeah, that's relatively it. This is how I manage the almost $400,000 in assets that I have at the moment. One thing that I recognize is I don't really have my checking account value in here, which would be nice because I do keep a month or so salary in my checking account, just for working capital and stuff like that. So technically, I have a little bit more cash on hand than when I'm relaying. But the fact that I'm stacking up cash in here at the moment, we're just under 5%, plus a little bit of percentage that I'm not keeping track of my checking account. This dividend yield continues to slightly come down. Same with the yield on cost, and that's obviously due to the cash being about 1.7%. So obviously, a lot of the stocks that I invest in are in the 4 to 5% range, but it's being partially offset by the 5% of cash, which is only at 1.7%. And that's obviously dictated by the federal interest rate. So everyone's relatively familiar with that. Now, before we really jump into the other aspect of things, getting individual stocks and what's in the individual brokerage account, what's in the Roth IRA, I think this is a really cool graphic to see how it can really combine. I'm obviously adding a lot of capital to the portfolio along with the growth that I'm getting, but that just goes to show you that whatever you do, whatever you add on a percentage basis, it will be about the same as what I'm getting. I wouldn't be surprised if I'm getting about 20% a year in terms of returns, just based off being lucky. So anywhere between 10 to 20%. Obviously, picking stocks that I believe are winners, dividend stocks, hopefully provide me cash flow out forever. That is the goal. But luckily for me, it's turned out very well, adding a lot of capital to the portfolio as well. Keep that in mind. But the percentage change for you, if you were to keep on top of it, add 50% a year, you'll almost double your money every 2 years. Hopefully, that's kind of the idea here. Is if you're saving about 50% of your income, you'll easily double your income, every or double your portfolio size every year, hopefully. So 2 years ago started with about 172,000, and that has almost since doubled to 330,000 over the past 2 years. So keep that in mind. Haven't necessarily been able to save 50% of everything, but trying my best and have done a pretty good job of increasing. And of course, this doesn't include things outside of the fidelity aspect of the portfolio, so keep that in mind as well. Now, actually hopping into the markets themselves, this isn't a very good jump in terms of long time span, but what we can see is the market's up to around 32, just over 3,200, which is pretty wild because I felt like we were just at 3,000 not too long ago. Nasdaq is up to just under 9,000, which is pretty crazy, up 0.3% today. We're just under 28,600 in the Dow Jones Industrial Average, up 116 points and about 0.41%, which is pretty crazy. Top news today: Boeing fires the previous CEO due to the fact of the 737 MAX crisis and hires a new CEO. So everything's up about 3% for Boeing, which, if you're a Boeing shareholder, is really good. I was hoping Boeing would stay relatively devalued until January when I can invest in my Roth IRA. But it is what it is. Hoping for a good entry point in the future here. Now let's jump into the actual portfolio. Okay, so now we're going to jump into the actual portfolio thing, starting with Avi here. Purchased around 100 shares initially. So this is the individual brokerage account for you guys, to give you guys a brief overview of what's in here. Hopefully I'll be able to hide some cells so we can keep rows 1 and 2, but we will see. So we have 100 shares of Avi here originally, and now I have 103 just based off dividend reinvestment. Purchased that at about 72 bucks, so not the optimal pricing, but that's good enough for a 2,000% or $2 gain. Sorry, which is good for just under 28% total return. Currently yielding about 4.72%. Yield on cost about 6.6. Current yield is about 5.3, which is pretty exciting. Just under 500 bucks a year in dividends, which I can't scoff at whatsoever. So next one is BlackRock. Pays about $13.20. Has been growing that really rapidly, about 20% a year over the past couple of years. Originally purchased 6 shares. I think a couple shares here, a couple shares there. Currently with dividend reinvestment, we're up to about 6.1 shares. Purchased at about 424 bucks, so low 400s. We're up to just under 500 bucks, which is good for a $500 capital gain. 20% return in year, which is pretty astonishing. But I'm buying it for the expanding dividend. Hopefully do a split soon. Be able to purchase a couple more shares every month, potentially if the price is right. But we're just under 81 bucks a year in terms of dividends, which is pretty sweet. Um, Going to the next one is Bryn Mawr Bank Trust recently updated or upped the dividend from $1 to $1.04 a year, which is good for a 4% gain. Pretty excited about that. Originally purchased 200 shares. With reinvestment, I have 202 shares. Yield on cost is about 2.8%. Current yield is about 2.5%. Currently up about $1,000, which is just under 14% total gain on the actual position. $210 in terms of total dividends annualized. So excited about that. Very part of the large financial aspect of the portfolio. Bank of Nova Scotia adds to that. Yield on cost about 5%, 4.8% current yield. Now, this doesn't include the 15% tax that I get from foreign investment in Canadian stocks, but so it's not too bad, but this makes it, just under 4.5% maybe of current yield, just over under 4.5% as well for yield on cost. So still can't complain with just over 4.5% or just under 4.5% on yield. Paid about 54 bucks. Haven't really moved too much in terms of capital gains, up about 7% or so, but good for 280 bucks, or probably just under 250 bucks or so in dividends a year. Can't complain about that. Purchase a decent amount of shares every single year, probably about 4 or 5 shares a year if I were to keep reinvesting that. So far so good. Large portion of the portfolio, as you guys know, is in energy stocks: BP, Shell, Exxon, Kinder Morgan, Cheniere Energy Partners, stuff like that. So you'll be seeing a lot of energy stocks here. Currently down on my BP position, purchased at about 39 bucks. Currently sitting at just under 38 bucks. But the actual position yields just under 600 US a year, which is pretty cool. So about 50 bucks a month if I were to consider that, or 150 bucks every quarter when it actually pays out in dividends. BP Midstream Partners here on row 9. 9.4% yield, 8.8%. Purchased about 500 shares, and this was based off the fact that I was really upset I didn't buy Shell Midstream Partners when it IPO'd. So I waited a couple months after the IPO for BP Midstream Partners, which is Gulf of Mexico assets, some onshore U.S. assets, and some other stuff that I probably don't know about. So I loaded up on this because I regretted not buying the Shell Midstream Partners. The distributable cash flow obviously covers um, the dividend and the yield that we have here. So feel relatively safe, even though it's a 9.4% yield on cost, 8.8% total yield, that we're relatively safe in terms of the dividend. Going to an industrial position here, Caterpillar, ticker symbol CAT, for just over 4 bucks a year in dividends. Yield on cost at the moment is 3.4%, 2.8% yield. Purchased about 38 shares with some reinvestment, added another 0.27 shares. Purchased at about 119 bucks. We're up to almost 150. Gives me $1,000 capital gain, 24% in terms of gains, and this is from early October, so just over 2 months worth of investment. So if you were to annualize that, really good return, 157 or so dollars in terms of dividends a year. Moving on to Chesapeake, don't really want to touch on this one too much. Purchased at a bad price. We're down about 90 something percent. Doesn't pay a dividend anymore. Hoping that eventually turns around or what have you, but goes to show not all your stocks can be winners. One of the ones that I purchased back in, I think, late 2014, early 2015. So Cheniere Energy Partners is an LNG company here. Purchased about 123 shares originally, up to 128 shares at a cost base of about 36 bucks. Gives me capital gains around $650 US, 14.5% total return, $317 in terms of distributable cash flow to me, which is pretty nice. Alphabet doesn't pay a dividend, but have about 4 shares or so. Got myself to a decent sized position here. Purchased about just under 1,200 bucks. We're looking at over 1,350 at the moment. $600 capital gain, 14% return. Nothing too astonishing with that. You have Icon Enterprises here, $8 in terms of annual dividend yield, which gets me at the moment 13.2% actual yield, 8% yield on cost. That is what it is. Purchased 5 shares originally. Currently have 7.6 shares due to dividend reinvestment. Cost base is around $100. It's only worth 60. So I'm down on this position, but it's offset by the fact I've reinvest the dividends, and it's offset by the fact that I've purchased more dividends. Even though the fact the price went down, I'm almost breaking even, I guess down by 8% or so. But it gives me about $61 a year in dividends. Not really going to add to the position at the moment. Johnson & Johnson purchased 72 shares, been reinvesting them. Purchased about 131. It's currently up to about 146. Almost a $11,000 position, up $1,100, 12% in terms of capital gains. But I'm in it for the dividends. Y'all know that. $276 a year in dividends, 2.9% yield on cost, down to 2.6 in terms of total yield. Kinder Morgan, another one that I purchased probably late 2014, early 2015. Purchased around 105 shares originally, up to about under 120. Purchased for about 33, almost $34. Cost basis at the moment, or the actual value at the moment, is around $21. Sorry. So we're down about 1,000, just under 30%, but we're making about $120 a year in dividends. Might add to this one. I think what it was is just the fact that when it was IPO'd and they merged, not IPO'd, but merged with the other Kinder Morgan companies, it was still being valued as kind of a master limited partnership, not a C corp. And once it kind of became a C corp, it started being evaluated as a C corp, which brought down the value a lot. So yeah, another energy stock here is Cosmos Energy. Pays about 18 cents a year in dividends, which is about 3%, 3.3% at the moment because the stock price has gone down a little bit. Purchased about 500 shares. We're up to about 507, just based off the fact that I've been reinvesting the dividend. Down just under 8%. Good for about $91 a year in terms of dividends. That's a long-term hold here for Cosmos. It's a play opener stock, so they look for places they can kind of make big discoveries. So I've done a little bit of that in Ghana, done a little bit off of Mauritania and Senegal, and they've recently found some stuff in Equatorial Guinea. So really hoping that this continues to excel in terms of being the first in and being able to get a decent evaluation of everything. All the um, all the Wall Street money is now out of Cosmos, so now this is strictly the fact that it's now publicly traded, now strictly owned by whoever buys the shares, which is pretty nice. So it's not really going to be dictated by, say, Blackstone or Warburg Princess or Pincus or whatever. So that's pretty nice, and that kind of allows it to be kind of a self-sustaining model rather than listening to, hey, we need to get this money out as soon as possible. It's more of the long-term strategy of things as well. So really excited to see what happens with this. They've been very good with respect to their exploration success, so I'm sure things in the Gulf of Mexico will continue to do well for them, as well as their other new play exploration prospects as well. Main Street Capital, a huge portion of the portfolio. I think this is either my first or second in terms of total value. This is not just because of what's in my individual brokerage account, but also in my IRA. Hopefully you guys will stick around to see that portion of the portfolio. It's larger than what I have in my individual brokerage account. Just under $3 per share in terms of dividends that come out. 9% yield on cost at the moment, 6.8% total yield. Purchased about 122 shares, reinvesting this stuff, just under 140 shares. Purchased at about 32, we're up around 43 at the moment. Gives me about $2,000 capital gains for a 51% return, and pays monthly, 41 bucks or so a year, 413 bucks or so a year, sorry. 3M, one of my better positions at the moment, purchased about 47 shares, distributes just under $6 a year in dividends. With reinvestment, I've gotten myself just under another share. Purchased about 162 bucks, so it's not in the 150 range like I would have wanted. But we're up around 700 bucks in terms of capital gains, just under 10%, and we're making about $275 a year in dividends. So pretty sweet with that. Then you have Altair Group, 300 or $3.36 a year in dividends per share. Purchased 133 shares cumulatively. Purchased 20 shares here, 50 shares there, what have you. Now we're up to just under 137 shares. Cost basis is around 46 bucks, so not best, but it's still good nonetheless. Up about 800, almost 900 bucks in terms of capital gains, up about 14%, and yielding just under 460 bucks a year in dividends. So can't complain with that. Almost 125 bucks or so, 120 bucks or so a quarter in dividends. And I also hold this in a computer shares account, which you'll see a little bit later as well. So up to about 45 shares or so of Realty Income Corp. At the moment, $2.73 per year in dividends. Not the best cost basis at around 71 bucks or so, but adding to the portfolio, it continues to be one of those ones where it never really seems to go down, and on any pullback, it seems like you kind of have to add. So it is what it is. 126 bucks or so a year in dividends, so it's just over 10 bucks a month because this bad boy pays monthly. PepsiCo, not a bad position. Bought it at just under $99, just over 98 bucks, which is a really good position to buy it in. I think it dropped from about 120 to just under 100, so I executed that, purchased 53 shares at that moment. Just over 54 shares with dividends reinvested, almost 4% yield on cost. Currently just under 3% in terms of current yield. We're up about 2,200 bucks or 44% return, and makes itself about a $200 a year dividend, which is pretty sweet. Almost 20 bucks a month if you were to view it in that lens. Phillips 66, yield on cost about 4.8%, current yield about 3.2%, which is pretty wild. Just under 3 shares additionally captured through dividend reinvestment. Originally purchased 40 shares at a cost basis of around $74.50. We're up about 1,800 bucks, 1,900 bucks, which is good for about 63% return, $154 a year in terms of dividends. Royal Dutch Shell, just under 7% yield from this bad boy on cost, 6.4% current yield, and about $3.75 in terms of annual dividend. Purchased about 56 shares. We're up to just over 5 shares of, or just under 5 shares of additional dividends from dividend reinvestment. Cost basis is around 54, so not the best in terms of capital gains here, but under 20%. But I'm looking for that cash flow, 228 bucks, which I can't complain with. That's just under 10 or 20 bucks a month if you look at it that way. Cedro Partners is another loser for me. If you look at the yield on cost, 0.1%. That's because they cut the dividend a bunch of different times. Purchased, I think, over 450 shares at this point, but with a reverse split where everything got kind of divided by 10, you can see that we've acquired a decent amount of additional shares with dividend reinvestment, but cost basis of 54 bucks. We're looking at 45 cents a share. So we're down a huge chunk, almost 99%. And at this point, it's just not even worth selling. Figured the best case at this moment is that it actually recovers, and it's not even worth trying to sell because I've already lost so much. It's kind of like, well, if I were to take that money and go elsewhere with it, it's almost better to just hope that this bad boy returns back to its norm. But we'll see what happens, and hopefully we can get back to close to even on that bad boy. But I've kind of written it off, and I'm not really too concerned about it. Square, 7 shares of that. Purchased 107 shares originally back in the day, but I sold 100 shares with the large capital gain that I saw here. Purchased at 22 bucks, up to 63. Up for 188% return or so. No real dividend associated with that bad boy. Look at Stag Industrial. This is one of my big winners. 6.8% yield on cost, 4.6% yield monthly, $1.43 every single year. Purchased 100 shares originally. We're up to 125 shares, almost 126 shares in terms of dividends, because of dividends reinvested here. 21 bucks in terms of the original cost basis. 31 bucks is what it's currently valued at. We're up to almost 86% return, which is pretty cool. But I'm looking at this 15 bucks a month in terms of actual monthly income. 180 bucks divided by 12, that's 15 bucks a month, which is pretty cool. Good enough for just a half a share or so a month if I were to reinvest it, and I believe I am. 9.4% yield on cost from Starwood Property Trust, ticker symbol STWD. It's just under $2 a year in terms of dividends. 7.6% yield at the moment. Purchase about just over 20 bucks. It's up to 25 bucks. 68% return, 130 bucks a year in dividends, which is pretty cool. Almost 10% a year just based off of dividends. AT&T also just raised the dividend from $2.04 to $2.08. Excited about it. Yield on cost 6.7%. Got in pretty good. Not the best though. $31 over the past year or so. 209 shares currently with dividends reinvested. Have 221 shares, which is pretty sweet. Just over $2,000 in terms of capital gains, up 33%. Because of the decent purchase price here. 460 bucks a year in dividends. So that's almost 40 bucks a month if you were to look at it that way. Just under 120 bucks every time it pays a dividend, which is kind of what I'm looking for. So I could purchase more of those great shares, 4 or 5 shares every single quarter. That's what the goal is. 4 or 5 shares every quarter, if you think about it that way, reinvested. That's another 8 or 10 bucks every single quarter that I'm getting added to my annual cash flow, which is what I'm looking for. US Bank Corp is probably the newest addition to the portfolio here. Purchased 21 shares, 2.8% yield, just under $1.70 in terms of dividends. Purchased for just over 60 bucks, actually down in the position, but gives me about 35 bucks or so a year in dividends. One of the smaller portions of the portfolio, but we'll see where it goes, see if I continue to add to it. We got Verizon, ticker symbol VZ. Yield on cost about 5.1%. 100 shares originally purchased, just over 9 shares added due to dividend reinvestment. Purchase price about 48 bucks. We are up under $2,000 or so, but that's good enough for a 41% gain. 260 bucks in terms of dividends, so just over 20 bucks a month. I wish it was actually like closer to 100, so 5 times this position, so it could be like offsetting my entire bill. But it is what it is. My phone bill, I mean by that. Then you got Wells Fargo, have over 200 shares in this bad boy. $2.04 every single year in terms of dividends. Yield on cost 4.2 and 3.8% yield on currently. 209 shares, purchased just over 11 shares, 12 shares or whatever, from dividends being reinvested. Current yield or current cost base is around $48.50. Have about $1,600 or so capital gains, up 16%. But I'm looking for that cash flow, just under 40 bucks a month in terms of cash flow. So this means every single time I get paid a dividend, I'm purchasing about 2.5 shares, which is nice because that means I get another 6 or so bucks in terms of annual cash flow every time I reinvest them dividends. So just looking at that, 15.4% return, not the best. But I'm looking for that cash flow just under $7,000 in terms of dividends coming from this portion of the portfolio. Current yield 4.5%, yield on cost about 5.1%. So that's the individual brokerage account. Hopefully that rounds it off for you guys. Pretty crazy stuff at the moment. Really hoping that it continues. Get to myself to almost double this in the next couple of years. Be nice to get about 2,000 bucks a month on average to be able to add to new positions. So that's kind of the hope here. Moving on to the YouTube Moolah portfolio, we kind of just touched on it a little bit. 487 bucks in cash Moolah sitting, waiting for you guys to add a ticker symbol down below for us to invest something into. So cost basis of the entire portfolio is 2,500, just under 2,600 bucks. We're up about 14% or so. dragged down partially by the fact that cash doesn't really have any return or anything like that. But we have IJR. I have to manually add in these dividends for the ETFs, so this might be off slightly, but this is based off of a month or two or a quarter or two's 4 quarter income. So it is what it is. Might be slightly off, might be slightly higher than this in terms of cost, but in yield, but whatever. 2% to 3% yield on each of these positions. Really just looking at the market value, capital gains, 13 to 30%, depending on what it is. $2.27 in terms of dividend yield coming from IJR. ITOT just under $3. That is what it is. ITOT is the total stock market coming from BlackRock. IVV is iShares S&P 500 value index, I believe, just over $43 coming from that position. I have about 6 shares of that. And then, of course, 3M, which was All Goods recommendation that I purchased, just a few months ago. So that is the YouTube Moolah portfolio, relatively quickly lived. Let's move on to the Roth IRA. So the Roth's currently got about $240 in cash in it at the moment, which is good for a $4.20 dividend a year. Yeah, there's that. Let's move on to BHP. BBL is the ticker symbol. Just over $3 a year in terms of dividend at the moment. Yield on cost about 14%. Last year actually made over 20% yield on cost based off of this because of the special dividend that they paid out in January. Normally this bad boy pays out in March and September, but they paid a special dividend in January due to selling off a lot of their onshore US assets. So really cool portion of that. Price paid for this is just under $22. Purchased 107 shares with dividend reinvestment, and the price exploding. We're up almost to 180% return. $4,000 gain or so, but I'm hoping that this bad boy continues this great dividend increase run up. We're up to about $440 or so every single year in dividends. If this dips much more, I'll probably be buying more. But I like seeing that 14% yield on cost, but I know in actuality I'm really only getting 6.7 based off of how much is invested. So keep that aspect in mind when you're doing your evaluations. Just because you have a 14% return or yield on cost rather doesn't necessarily mean you're making the most in your current yield. So always make sure that you keep both in check. Cyrus Run data storage real estate investment trust here. Current yield is about 3.1%. Yield on cost about 3.9%. Good for about $2 a year in dividends, which is pretty cool. $70 or 70 shares originally purchased, just over 6 shares additional due to dividend reinvestment, which is kind of cool. $51 is about where I purchased it at. We're up about $1,400 in terms of capital gains, which is good for about 39% return. In it for the increasing dividend, which has slowed down recently, so hopefully it picks back up. Otherwise, I might sell out of it and pick up something that has a little bit higher of a growth rate. $150 a year in terms of dividends, just over $10 a month. $30 every time I actually get paid. Disney, hoping this bad boy continues to grow in terms of dividend growth, up about 1.7% yield on cost. Purchased 49 shares originally, up almost 2 shares or so at a cost basis of about $103.50. Up about $2,500 or so in terms of capital gains, 48% return, almost $90 a year in dividends, so $45 every time I get paid. Hoping that this continues to increase. The payout ratio is relatively low for Disney, so it is what it is. First Solar is one of my growth stocks that I purchased 100 shares of, $31, up to about $57. Capital gains about $2,600, just under 100% return. So no dividend with that bad boy, but holding on for dear life. Icon Enterprises, another portion of this. Purchased 10 shares originally. We're up almost 7 shares, almost 70% more shares than when I originally purchased it. But you can see yield on cost not the best. Purchased this at about $98, and the price is about $60. We're actually in the profit on this one though, based off the fact that Who knows why, but 138 bucks a year in terms of dividends, which is not bad. This is the larger portion of the Main Street Capital portfolio. Purchased this not too long ago, so the yield on cost isn't as good. I believe the other one is at about 9.5% for yield on cost, but good nonetheless. Purchase price around 39 bucks. Purchased 150 shares or so, just over six shares in terms of from reinvestment, which is a good deal, up just under 900 bucks, 15% return. But I'm buying it for that cash flow, 460 bucks every single year, which is just under 40 bucks a month, which is pretty cool. So every single month, I'm almost adding an additional share of this. So every single month, almost getting another 3 bucks a year in terms of dividends. So you start thinking about this. It's like, okay, well, every single quarter, let's say I'm getting another 9, 10 bucks from Main Street Capital, and the same thing with AT&T. And so a lot of people might hear me say like, good for another 9 bucks a year. And it's like 9 bucks a year. It's like, well, what the hell are you in it for? It's like, yeah, but I also have 40 positions. So you start thinking about it. If each of them are averaging, 9 or 10 bucks every time you get a dividend investment, it starts adding up. And I think next year should be about $400 in terms of, um, or no, not even $400, almost $800 in terms of if everything continues to get. No, I'm sorry, I was right. $400 if everything continues to be reinvested, because the average dividend yield is around 4.3%. I'm supposed to be making around $11,000 to $14,000 in dividends. So 11 to 14,000 times 4%, that's 400 to 500 bucks. So, just from dividend reinvestment, going to be making an additional 400, 500 bucks a year, which is nice, because then on top of that, I'll be getting another 4 or 5%. And that's not even including dividend growth. So anyway, getting off on a tangent, but a lot of people like to make fun of you saying you're getting excited about $9 a year. It's like, yeah, well, 9 times 40, you end up getting a pretty decent growth here. So Philip Morris, 61 shares purchased originally. We're actually down on this position. Cost base is around 92 bucks. So really in it for the total dividend though, but currently actually not down. Actually, we're offset by the fact of the dividend reinvestment, as well as um, minor offset being the price actually offsetting us. So while we're down, let's say 6 or 7 bucks in terms of price per share, we're actually up in terms of 5 or so shares being reinvested. So completely offsets. We're at about zero in terms of capital gains, but 300 bucks a year in dividends, which is pretty cool. South 32 was a spinoff from BHP. Don't even really want to talk about it. It's a really small. Can't really describe it all that well, but pays less than 10 bucks a year in dividends, so nothing too big. Another portion of Verizon shares, 31 shares originally purchased, yield on cost about 5%. Current yield is about 4%, and we're up about $2,000 in this position, or sorry, $600 in this position, 41%, $85 or so in dividends. This pays for about 1 month's phone bill, so that's that. WP Carry, another good little success story here. Just over 4 bucks a year in dividends per share. 6.8% yield, 5.3% yield at the moment. 6.8% yield on cost, sorry. I just said yield. 65 shares were purchased originally. We're up almost 11 shares due to the fact that we reinvested those dividends. Purchase price around 61.50 or so. We're up just under $2,000 in terms of capital gains, which is a 50% return, 316 bucks or so in total return. So um, total dividend just over $2,000. So that's pretty sweet. Over 150 bucks a month just coming from the Roth IRA, which is nice. 43% total return if you look at it that way. Started with $32,000 or so. We're up about $14,000 or so, which is good for just over 43%. So looking at that, 4.3% current yield from the Roth IRA, 6.2% yield on cost, which is pretty cool. Now we're getting to the smaller aspect of the portfolio, talking about M1 Finance computer shares. So I'm sure some of you guys will drop off now, because this is getting to the point where it's a minor part of the portfolio, but it's important nonetheless for everything. Johnson and Johnson purchased around 21 shares. Currently, still have about 21 shares. Actually, yeah, because everything goes to Visa at the moment in terms of dividend reinvestment. Um, Dividends coming from Johnson and Johnson and 3M all go into Visa at the moment because Visa is the underallocated portion in the M1 finance portfolio. Um, Price paid 128 bucks or so, which is a decent purchase price, just under 14% capital gains, $82 or so a year in dividends. 3M just under 100 bucks a year in terms of dividends, just over 11% return here. Purchased this one at about 157 bucks, so not too great, not too bad. Yield on cost for 3M about 3.7%. We're up to 3.3% in terms of current yield, so the price continues to increase. Visa, $1.20 a year in dividends, which is pretty sweet. Purchase price of about 178 bucks. Price actually is up to 188. So that gives us about an 88% or $88 return, just under 12%, and looking at just over $5 a year in total dividends. So hoping that this bad boy continues to increase. A lot of folks gave me crap on my last video being like, Visa's not that good of a stock, but it's like, yeah, but they're increasing the dividend 20% a year. So, $5 will go to $6, $6 will go to $8. I'm looking at it that way. Very low payout ratio for Visa at the moment, and they're continuing to grow like wildfire. So if they're able to keep the yield, 0.6 or 1%, hopefully, and they continue to grow at say 20% a year, hey man, it's continue to grow at 20% a year. It's going to double in about 4 years, and that means the dividends also going to grow and double in about 4 years. So that, along with dividend reinvestment, might go a long way. Going to computer shares now. Altria Group is in there as well, 22 shares, another 4 shares or so, due to the fact that we have some dividend reinvestment. Yield on cost about 6.5. Current yield is about 6.6, which is nice. Price paid is about 51 bucks, so not the best. But in terms of gains, just based on the fact that we have dividend reinvestment, 7.17% or so, good for just under 90 bucks a year in dividends. WTR, which is Aqua America, which is a utility company here, yield on cost about 3.6%. Current yield is about 2%. 23 shares originally purchased, just over 3 shares in terms of dividend reinvestment. Up a really good portion on this bad boy, 104%. Current yield, or current dividend rather, is just under 25 bucks, so just over $2 a month. ExxonMobil, been growing this position pretty substantially, purchased around 102 shares originally for a price of about 75 bucks, so not the best purchase price, but we're up to 107 shares now, just under 130 bucks in terms of capital loss, just under 2% in terms of gain, negative 2%. 375 bucks a year in dividends, which is nice. So this is just over 30 bucks, or about 90 bucks every single time I get a dividend, which is nice. IBM, just over 35 bucks a year in terms of dividends from IBM, 4.1% yield on cost, 4.8% current yield. This is probably partially offset based off the fact that I have some dividend reinvestment, even though the cost basis is higher than the actual value of the share. So I'm 158 down to 135 bucks. So we're losing about $23, $22 or so per share in terms of value. It's offset by the fact that we've been reinvesting those dividends. 35 bucks a year in total dividends. You have Keurig Dr. Pepper, 60 cents a year, and 60 cents a year in dividends, 2.7% yield on cost. 2.1% yield at the moment. Purchased under just under 7 shares, almost 7.5 shares of shares at the moment. 22 bucks, so we're up 40% or so. Total dividends just under 5 bucks. So wish I still had my old Dr. Pepper, but it is what it is. They gave me a bunch of money. They gave me like 700 bucks during the merger. Had like 900 shares or 900 bucks of shares or something like that. I wish I still had Dr. Pepper, but it is what it is. Philip Morris, everything's offset here. 5.5% yield on cost and current yield. 19 shares originally purchased, so while we're currently down in terms of price paid, everything's kind of even here, just under 20% return, 17% return. Total dividend is about $100, so just under $10 a month. Realty Income Corp again purchased just over 4 shares. Now we have just over 5 shares in terms of dividends. Went from $46 to 72, so I've been holding this bad boy for a while. 90% return, just over $10 a month in terms of dividends. Sorry, just over $1 a month in terms of dividends. Just under $1.20 a month actually. Clorox Company purchased, just over 4 shares as well, just under 5 shares. This is another good return, $88 to $150 per share. It's almost 100% return, but of course, a very small portion of the portfolio, just under $2 a month in terms of dividends. So I think it's about just under $6 every single time. Waste management. This one's been growing like a weed as well. 4% in terms of yield on cost, 1.8% current yield. Just over $2 a share in terms of dividends. Purchased around just over 5.5 shares originally. We're up to over 6 shares now. $50 original purchase price, and we're up to about $113. So wish I purchased more. It's up 138%, but it's a very small position. Just over $1 every single month in terms of dividends. So we get a dividend for about $3 every single time. Shareholder services. This is one that I rarely ever really check. It's a very small portion of the portfolio, so this is probably slightly off in terms of how many shares I have. So if anything, it's going to be more optimistic than this. But anyway, it is what it is. Purchased about 4 shares of AbbVie. This actually was originally in my computer shares account, and they transferred it over as the transfer agent here, or the broker agent, or whatever the heck they call it. Decent terms of reinvestment here. Capital gains about 55%. Good for just under $2 a month, so nothing too large. Purchased 2 shares of General Mills. This is kind of basically offset each other based off the fact that the share price has gone down, but I have some dividend reinvestment, $4 in dividends every single year. You have McCormick here. This has done really well, but I don't really have too many shares here. So 123% return, but I don't even own 1 share. So keep that in mind. Procter & Gamble has done really well as well, going from $79 to $125 a share, but had very few shares. So 86% return, but on a very small portion. 15% total dividends. So this in total, just under $45 in dividends, so just under $4 a month or so in dividends here. Helps out, but nothing too crazy to look at. Went from $792 in terms of cost basis to $1,300, which is $500 or so in returns, just under $67 in total. So skipping over the share value package, we have Fundrise here, which you guys can see. Currently keep it at about 4.5% yield, just based off the fact of what I get in dividends. So I try to keep track of this. Originally purchased around $1,800. Due to reinvestment, we're up to around $2,010 or so. So 10% or so gain, $90 a year in dividends from Fundrise, which is kind of cool. Cardone Capital, real estate aspect things here. Don't get to reinvest the dividends in Cardone Capital, but it pays out about 4.5% every single month. So I get about $56 directly into my Wells Fargo checking every single month, which I then generally just either keep in there or put it back into my individual brokerage account. Not directly, but indirectly, because I'm always adding from the checking account to the individual brokerage account. Then I have personal savings, which is my Amex nest egg sort of fund here. Nothing too much in terms of how much is in here, but it's a couple months worth of expenses. Really, at the moment, I'm really only spending about $2,000, maybe $3,000 a month in terms of actual needs. So if I actually wanted to cut this, I actually could. I'm spending a little bit more because I'm traveling a little bit, but nothing too much more than when I was living in Houston, when I had to pay for a lot more expenses. At the moment, really only spending about $2,000 to $2,500 a month. So this is 5 to 6 months worth of actual expenses, and I could cut down if I needed to in the case of an emergency. Get about $204 or so in terms of interest from this account. Continues to go down though because Amex continues to decrease the yield based off the federal interest rate. So it was originally 2.1%, I think, coming into this year, and it's already dropped down to 1.7%. So um, most of the time, all my other stocks really go up in terms of yield. This is really the cash aspect of the portfolio is the only one that really is fluctuating down just based off the fact of the federal interest rate. So that is it, guys. That is the entirety of the dividend income portfolio. A lot of you guys have been asking, so hopefully you got enjoyment out of that. I know this is a long video, so I appreciate your guys' patience walking through it, but hopefully it was eventful. And if you guys don't really know who I am, I'm an engineer by background, have about $400,000 in the portfolio for you guys to look at, watch me manage, watch me do whatever I do. So if you haven't already, hit that subscribe button, and you guys can watch videos like this every single week or so. Come out with something else, talk about something different. But really hope this video finds you well, guys. Been going on a decent amount of time now, so if you guys are actually still here, very surprised and appreciate it. Really means a lot in terms of listening to me ramble about every single position that's in the portfolio for God knows how long at this point, and means a lot. Hopefully you got some insight out of it. Hopefully some of my banter was educational as well, and nice to see how the portfolio has grown over the past 6-7 years. So really cool to see. Been investing since about 2012, so maybe I guess going on what is that, 8 years, going on 8 years, I guess 7 years, however you want to claim it, but really getting serious in the late 2014 2015 timeframe. So pretty cool to see how the portfolio has grown just over the last 2 years. Really starting to see the snowball effect. So hopefully adding a couple $1,000s a month in terms of additions to the portfolio, and we will see where we get to in a couple weeks. So cheers, guys. I will talk to you guys on the next video. Have a good one.